Hello everybody, this is Toni Turner and welcome to the market now as of Friday, November 4th at about 3:30 p.m. Eastern. Well, Richmond Federal Reserve President Thomas Barkin today said he is ready to act more deliberatively on consideration of the pace of future U.S. interest rate hikes, but said rates could continue rising for longer and to a higher end point than previously expected. It's kind of going around in circles. Barkin's remarks signaled that the pace of tightening may slow from here, though he endorsed Fed Chair Jerome Powell's view that rates could ultimately end up higher than officials had previously estimated. On that note, let's go on to three charts that could give us some insight into the week to come. Okay, so let's start as we always do with a daily chart of the S&P 500 Spider, the SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading down here right under the green line, the 50-day moving average. It was trading at $374.92. That's about $37.49 on the S&P 500 itself. It's trading now at 22% below the SPY's all-time closing high on January 3rd. You can't see it on this chart, but on January 3rd, the opening of the year, it's trading 22% that all-time closing high, again at $477.55. So we know what has happened, obviously, from the March high here, and it came all the way down here to the June lows, bounced back up, hit the 200-day moving average, got smacked on the head here. That formed a ceiling the SPY couldn't get over and hasn't since, then rolled back down here in September, and we hit this low here. Hold on, I'm trying to find it on here. We hit this low here, the October 13th low at $348.11. And that's where it gapped open down here. It gapped down and then opened on this low at $348.11. So right now, that's our new red line in the sand, $348.11. Now, as I've mentioned to you before, if you look at price support on the SPY from a long-term chart, you will see price support that's pretty decent from 350 to the 360 area. That's from back in the fourth quarter of 2020. So we're pushing our luck here with this low at 348, but it was a gap down and it did rally to close higher. So we still have this line of support here, and then up here above 350 and a little above, and then we've got 360 right there. And this is where the long-term support took place again in the last quarter of 2020. What we need here as far as price resistance, we've got the 50-day moving average moving down overhead here. The SPY could not get over that today, but it got up to it. It got back at the first of the week. It jumped over the 50-day, but could not stay. I always count, can it stay above a 3 closes or more, and it couldn't. It bounced up at the beginning of the week and the end of last week, bounced up, went up to 390, formed this price resistance here that almost lines up with price resistance from earlier in September. So it came up, hit its head on that, came back down, and now sitting, as you can see, between the 20-day moving average and the 50-day moving average. Now, where is the bottom? Of course, that's still in everyone's mind, but it's too early to make that call yet. We know that the prior June rally back here, June, July, we thought, wasn't that wonderful? Maybe that's the bottom. Turned out it wasn't, and it was kind of telling when the angle got really, really steep and then couldn't get over the 200-day. We don't have that steep angle here. We have much wider candles, seeing they open or close, making much taller candles. That shows you the bulls and bears are fighting. The bears are pushing the candle lower, the bulls are pushing it higher, and there's a lot of duking it out going on here. So we're still in undecided territory here. It's not as bad as before but we need to really watch if it starts down to look like it may test those 348 lows again. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this represents the Nasdaq 100, a major index in the stock market with holdings like Apple, Amazon, Microsoft, Alphabet, Meta, that whole group. So that's been pretty rowdy lately. The QQQ, and you can't see it on this chart, but it made the last all-time closing high on November 19th at $403.99. Now it's been, you can see March in this chart. You can't see all the way back to November of last year. But like the SPY, it made the QQQ made a high back here in March of 2022, a relative high, certainly lower than the original high. Came back down here to these June lows, rallied back up, and we noticed that the SPY could not move in August to go over the 200-day moving average. In this case, the QQQ couldn't even get up to touch it or get within kissing distance, we like to say, of it. So that means that the Qs were weaker than the SPY. So momentum stocks were losing momentum here. Then, of course, the Qs came down in a decided downtrend, lower lows and lower highs, down to this October low. And it came down to the October low to gap down and open at $255.16. So this low here was decidedly at a discount to the 50 and 20-day moving average. It did gap open and bounce, we'll give it that, and it rallied back up here, a little tiny rally, back up to $284.60, still underneath that doggone 50-day moving average. So it came up to that, over the 20, could not get over the 50, kind of noodled around the week before, and then this week said the heck with it and came back down. Now it is trading today at $263.60. It has not moved below that 260 line. Again, this line down here is 255. So, and if we look at long term, if we look at a long-term chart, same fourth quarter of 2020, we did have price support there around $260. So we know we have that longer-term support here at 260. We are really cutting it close now. But tech stocks are really having a rough time here, especially on the heels of the Fed's rate hike this week. Higher interest rates never help tech stocks. So while I'm sure many of you traders out there are itching to grab some low prices here, maybe, maybe not, please remember that catching a falling knife sometimes can be really challenging, to say the least. So please, please trade very, very carefully here and know that whether we're nearing a real bottom here really remains yet to be seen. This isn't the most encouraging pattern in the world unless it decidedly starts up and then price moves over the 50-day moving average. And is this a tough market to trade? Yes, it is. Tech stocks or otherwise. The market's all over the map from day to day. So a lot of you have been saying, hey, Toni, it's a tough market. It is a tough market. I totally agree with you. Our final chart today is a chart of the Global X Silver Miners ETF, symbol SIL. As I went through all of the sectors and industry groups that I look at today, I noticed that metals were starting to move up again. So do I think you absolutely have to be trading in anything right now? No, I don't. But if this is something you'd like to look at with me, again, I did notice that metals look like they're going to start up. And this has a relatively low risk look to it as long as you mind your stops. So we know here that this is the Global X against Silver Miners ETF. I believe the price of silver has already started up. The miners are, it always leads the miners, goes ahead of it. We had a recent April 18th high here on the oh, excuse me, you guys. I didn't do what I normally do. I should have told you that the SIL has 34 holdings. Top holdings include Wheaton Precious Metals, Pan American Silver, Buenaventura, and Hecla Mining. So when I captured this chart today, I'll say again, the SIL was trading at $25.57. It made a recent high. We'll start up back here again. It made a recent high on April 18th of this year at $40.29. Then it gradually rolled over here and started falling, fell down to a May low at 27, about 27, rallied to make a June high here, and then fell down to, stayed beneath the 50-day moving average and the 20-day moving average, rolled over into July, tried to get up over the 50-day, couldn't get over it for 3 days in a row, moved back down and just gradually started falling here until we hit the September low at $21.26. From there it rallied back up here to 26, couldn't stay there, fell back down, but started finding support right here in this line at right about 24 and change, right down in here. Now it's held up there so far, and now it's back over both the 50-day, the green line, and the 20-day moving average. If it's building a base here, that could be a good thing. If it is, and it's nobody knows for sure yet. This is a crazy market, but it appears to be on any normal day that the SIL is building a base here. Of course, we'll have to see how it behaves. So right today, again, the SIL is trading at $25.57. We have resistance right here at 26, but I'm going to give this a little bit of room, but not much. If in the coming week the SIL can stay above the 50-day moving average, the 50-day moving average, the green line, is coming in here now at $24.22. If it can stay above, right now it would be $24.22. I may add a small position to my trading portfolio. My initial stop is going to be $23.50. My initial stop is going to be down here at $23.50. If and when the SIL rises above 26, I want it to break out here. If it rises above 26.50, I will add to my position, and by then I will have a trailing stop. So you may want to keep an eye on the SIL in the coming week. Now, please know that if you'd like to become a more successful trader, please check out my trader training programs. You can choose from 10 different online trainings, and I'm sure you're going to like my very simple strategies targeted to swing trading, trend trading, bottom trading, and more. These programs can help you increase your gains quickly and easily. How to read charts is for novice traders. 3 winning setups is a really good one. And as you know, pretty soon we're going to need how to bottom fish like a pro, so you need to be up to date on that. And of course, this is our flagship training program, 7 Steps to Successful Trading. Very, very popular training program. Shows you step by step how to be successful. To see all of my online training programs, simply go to the link on the screen up here, or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.